All right, what's going on, guys? It's Luke here. Today, I wanted to make a video going over how to trade evals. I kind of wrote this out really quick, and a lot of people always ask me like how they should go about approaching their evals. So I figured I'd make a quick video on this. I'm going to show you guys what I would recommend for beginners, intermediate, and then this is high risk, advanced. This is what I do. Do not recommend this one, but I'm going to tell you guys what I do a lot of the times and what a lot of traders on social media do to get these like big payouts you see. So first, with beginners, this is going to be for people who maybe you have like, let me put this on too. Maybe you have like no payouts under your name, or you have like one payout to your name, and you're just a beginner. So this is what I would recommend. This is what I did a lot of the times as a beginner. You're going to risk around $250 per trade. Now, a standard account's obviously going to have $2,000 of drawdown. So this is gonna make you're gonna have to basically lose 8 trades in a row to blow the account. Like, it's probably not going to happen. And what you're gonna be doing is looking to trade consistently towards your payout. So risk 250, depending on your risk reward. Maybe you look to make 250, make $500, whatever, wherever your draw liquidity is. You're taking trades, but you're taking small base hits basically, and you're slowly building up a bit of a buffer, and then you can take the payout whenever you feel comfortable. If you've knocked out your 5 days and you have a $1,500 buffer built, and you don't mind only leaving a bit of money in the account after, this is what you can do, right? So now, the best accounts I recommend, the number one I recommend for beginners is Alpha Zero. Why? Okay, I have a whole video on this if you go to my prop firm playlist, but basically Alpha Future Zero is the best for beginners because it lets you keep your extra drawdown. Let me explain, okay? Let's say you build your account up, you build your account up $1,000, right? So now you're eligible for a $500 payout because it's 50%. So what's going to happen with all these other firms is you're going to take that $500 payout. Now you only have $500 left in that account. So once you lose that $500, the account's gone. What Alpha Futures with the zero account does, and with the premium, all the alpha accounts, they let you keep the extra drawdown. So instead of your max loss limit being at $0, it's actually going to be at, what would it be at? 2,000. So you get an extra like 1,500. You get $1,500 of drawdown basically. So you're getting to keep your extra drawdown. I go more in depth on this in the Alpha Futures Zero video. Just go to my prop firm playlist and you'll see it all. But this is the best account I recommend with this method, right? This is best for beginners. You're going to be risking $250 per trade, however many micros that is for your stop loss. Another one, the only thing with the Alpha Future Zero is there is a 40% consistency on the funded. But again, if you're taking small base hits, you're only risking $250. This really isn't that big of an issue, right? You're going to be taking small base hits and you're going to be taking consistent wins, and you should be fine with this. Now, the next ones I'm going to recommend is going to be the Lucid Flex, Top Step, and FundedNext Flex. Any account really, it doesn't really matter. Lucid Flex has simple rules. There's no consistency on the funded, so you don't have to worry about that. Same with Top Step, same with FundedNext. These three have no news rule. Alpha Future Zero does have a news rule, but the other ones don't. But again, the only thing that's different with these is once you take that payout, all you're left with is your account can't go below zero. Well, the Alpha Future Zero, you get the extra drawdown. So this is the beginner method though. Risk 250-ish per trade, maybe $300, $350, whatever. But you're going to trade consistently, take base hits, build up like an account buffer slowly, and then you're going to take your payout. Okay, that's what I recommend if you have barely any payouts to your name or no payouts. Okay, that's number one. Intermediate, so this is if you know a little bit more what you're doing, you have a couple payouts and you're willing to take a little bit more risk down. This is what you can do. You're going to be risking around $500 per trade. So it really depends. You could be $400 to $700, but let's just say $500. You're basically going to have to lose 4 trades in a row to blow the account. And if you have a high win rate system, it's usually pretty unlikely, but it's obviously possible. So you have to be willing to accept that risk, right? So it's more risk, but it's the same thing as a beginner. You're going for kind of those base hits. You're going for $500 here, maybe $700, maybe $1,000, depending on your risk to reward. But you're definitely increased risk, but you're not over the top. So this is what I recommend for an intermediate if you do want to start scaling up those payouts. And the best accounts that I would recommend to do this with is going to be your Top Step accounts, your Lucid Flex, FundedNext Flex, Alpha Premiums. Those are the ones that have no consistency rule on the funded stage. So you can actually, if you do catch a runner and you want to hold it, you can actually do that with these. You don't have to worry about a consistency rule. Again, max loss limit is going to be 0 after your first payout, so make sure to know about that. But if you're an intermediate, $500 per trade is a pretty standard amount. A lot of people do this. Again, you just got to be willing to accept that if you do lose 4 in a row, you're going to blow the account. But if you have a high win rate system and you know you're trading properly, you're not revenge trading and being an idiot, like you're probably going to be fine. But just something, if you have a few payouts under your belt and you are more advanced, you're usually going to be fine with this psychologically. But this is intermediate. Yeah, that's what I recommend. That's just personally, and these are the accounts. Obviously, there's more I'm missing, but these are just off the top of my head. Now, high risk, advanced. This is what I do a lot of the times, and this is what a lot of traders on social media do. Okay, so this is a lot more risky. Hold on, I'm just gonna pause this and then I'm gonna get into it. All right, so in this method, basically what you're doing, and this is, again, like this is what I do a lot of the times, and this is what a lot of people on social media do, this is what a lot of traders do on social media. You're pretty much half your drawdown. So you have $2,000 drawdown, you're risking $1,000 drawdown or the full $2,000 drawdown. Or more per trade, like I said. And you're looking for that first trade, 1 to 2 trades to kind of build your buffer. And then after that, you're securing the winning days. Now, what's the downfall of this? Obviously, you could blow the account pretty quick. But if you sit around all week and you wait for an A+ setup and you see a setup that is so clean and you're willing to throw down half your drawdown on it, there's a high probability that trade is going to play out. And now you have pretty much your buffer built, depending on if you go for 1R, 2R, 3R. You know what I mean? I've had trades where, again, I risk 1K to make 4K. And then my buffer is pretty much built. And then all you have to do from there is secure your winning days. Now, this is best for me psychologically because I personally don't like any more grinding at accounts for like little like $500 wins and stuff like that. Obviously, I recommend that. Like it's obviously a lot better, but personally for me, a lot of the times it's better for me to sit on my hands, wait for a really good setup, and just throw down the risk on it. And then after that, I don't have to worry about building a buffer, and I can just secure my winning days. So again, do not recommend this unless you're super advanced and you are willing to potentially, lose your account, right? So much more risky, but again, this is something that a lot of high risk traders do. When they see an A+ setup, they wait around all week and they're willing to throw down the drawdown, half their drawdown on it. Again, your buffer is going to be pretty much built after 1 trade, 1 to 2 trades. It depends on how many, like if you're risking 1K to make 1K, obviously it's not a good amount of a buffer built. But if you're risking 1K to make 3K, 4K, your buffer's built. You just need to hit your 4 more $150, $200 winning days. And again, the best accounts you're always going to be wanting to do are any accounts that have no consistency on funded. You don't want to have a consistency on funded for these because it's just going to screw everything up. You're going to have to be worrying about a consistency rule. You want accounts with no consistency on funded, okay? And that's going to be your top step accounts, your Lucid Flex, your Alpha Premium, Funded Next Flex, or the Bolt account. Top 1 Elite Daily. What other props are there? I don't know, but any account with a no consistency on the funded, I just can't think off the top of my head. These are the ones I just thought of off the top of my head. So these are the 3 things you could do. If you're a beginner, risk around $250 per trade, trade it consistently to a payout, take your payout. Again, I first would recommend the 0 account. Otherwise, the Flex, the top step accounts, Funded Next Flex, any account with no consistency. Again, the Alpha Future 0 does have 40% consistency, but again, you're able to keep your extra drawdown. That's why I like this one the best. But this is how I trade. I would recommend for a beginner to trade. You're risking low, you're going for base hits, and then you're going for that payout. So that's number 1. Intermediate, if you've been getting a few payouts, you know what I mean, you're looking to up your risk, I would recommend going to around, like I said, around 350 to 750. But I think 500 is a good in between. Obviously, it's more risk, but the same thing as a beginner, you're looking for those base hits, but you want to be going for accounts that have no consistency on the funded, because if you do catch a runner and you want to hold it, you can obviously do that and you don't have to worry about the consistency. So these are the ones that came to the top of my head that I would recommend: Top Step, Alpha Premium, Lucid Flex, whatever else has Funded Next Flex, whatever else has no consistency. But yeah, this is usually good for most people, in my opinion. If you know what you're doing, this is usually going to be fine. Unless $500 scares you, these are going to be fine. So now, high risk, advanced, this is what I do a lot of the times. Now, sometimes I do trade the $500 risk. It just depends on the account type. It just depends really, but this is what I like to do. Risk $1,000, which is half the drawdown or full drawdown per trade. Look to build the buffer in 1 to 2 trades, and then you just scrape out your winning days. It's just a lot less stress on for me. I know I can pass evals and get back to funded as fast as possible, so that's another thing. If you know you can pass evals really quick and you can afford it, this is something you can do. Obviously, again, I don't recommend it, but again, best accounts, you're always going to be looking for accounts with no consistency on the funded, and these are the ones that just come to mind right now, but there's more I'm probably just missing. But yeah, this is something for high risk and advanced. But if you have a lot of payouts and you really want to just build your buffer fast, you don't want to worry about building a buffer and grinding for weeks, and you know you just want to hit one good trade. You see once, you know how every week, every couple of days, you see that one setup where it's just A plus plus plus, and you just throw the risk down on that. You hit that trade. If you lose, you still keep half your drawdown. If that trade hits, you know what I mean, you're building a good size buffer, and then you just scrape your winning days. But again, yeah, I recommend obviously building consistently and trading consistently until you're obviously more advanced, and then you could start upping the risk. But that's just how prop firms are. So that's it from you guys. Hope you guys enjoyed this one. If you guys want to know about any of those accounts, I have videos literally on every single one if you go to my prop firm playlist. So go check that out. I have, like I said, like every video, I think I have one on the Alpha Future Zero, the Premium, the Lucid Flex, Top Step, Funded Next Flex, the Funded Next Bolt, the top one, Elite Daily. I think I have one on my funded futures, but I don't know. But any prop firm you guys want, that's just that's kind of like the tier list I recommend for that. So that's it for me, guys. Hope you guys enjoyed this one, and I'll talk to you guys in the next one. Peace.